Hello, my name is Mayanka. I am accounts and a finance trainer from Uplatz. In this class, we will discuss one of the important topic of Income Tax Act. Scope of income. Scope of total income means which income will be taxable in India. Which income will be taxable in India. We will discuss the scope of income. Scope of income, which income will be taxable in India, is that normally if any income which is received in India, arise in India, will be taxable in India, and the total income of the resident, if there is a person who is the resident or ordinary resident of India, then his income will be taxable in India. Means we will discuss the scope of income on the basis of residential status of the assessee. Means first we will discuss such person he is the resident of India or not. If is a non-resident, then we will apply the provision accordingly. We will also discuss the place of accrual or receive of such income, whether it is received in India, whether it is arise in India, then it will be taxable in India. Otherwise, it will not be taxable in India. And we will also consider the point of time at which the income had accrued or received by such assessee. Means section 5 of the Income Tax Act contain the provision which are relating to the scope of total income of the assessee. Section 5 of the Income Tax Act contain the provision, it is contain the provision which are relating to the scope of total income. For the purpose of this, we will check the residential status of the assessee, because if there is a person, if there is a person who is the proper resident of India, ordinarily resident of India, then his total income will be taxable in India. All income will be taxable in India. If he is the non-resident of India, then the income which is accrued or received in India will be taxable in India. All other income will not be taxable in India. Means the taxability of the income will be depend upon the residential status of the assessee. The residential status of the assessee. So the scope of the income of any assessee, it is depend upon the following three consideration. Means there are following 3 points which are required to be considered when we will calculate the income, when we will calculate the scope of income, the total income of the assessee. The 3 points will be considered. Number one is residential status of the assessee. First we will determine the residential status of the assessee. First we will check and then determine the residential status of the assessee. Number two, we will check the place of accrual and place of receipt of such income. We will check, or we will determine the place of accrual, the receipt of the income. Means where it is accrued or where it is received, and we will also determine the point of time at which the income accrued or the income received by or on the behalf of assessee, when it is accrue or when it is arise, when it is accrue or when it is arise, or when it is received. So these 3 points we will consider when we will determine the scope of total income of the assessee. Scope of total income of the assessee. So to calculate the total income of the assessee, there are three class of assessee. Number one, resident and ordinary resident. Number two, resident but not ordinary resident. And number three, non-resident. First, we will discuss resident and ordinary resident. The person who is the resident of India as well as ordinarily resident of India. The person who is resident of India as well as he is ordinarily resident of India. Who is ordinarily resident of India? Who is ordinarily resident of India? In the case of resident and ordinary resident, the following income will be taxable in India. Means the total income of the resident assessee will include the following. Number one, the income which is received or deemed to be received in India during the previous year. The income which is received in India or deemed to be received in India, it will be taxable in India. If there is any person, for the example, Mr. Mohan, he is a resident of India. resident of India. Any income which is received or deemed to be received, any income received or deemed to be received, deemed to be received in India, deemed to be received in India will be taxable India. It will be taxable India. Any income which is received or deemed to be received in India will be taxable in the hands of such a resident person. Income which accrue or arise in India or deemed to be accrue or arise in India, then it will be taxable in India. If there is any income which is accrue in India or which is arise in India, or deemed to be accrue or deemed to be arise in India, then it will be taxable in India. It will be taxable in India. Income which accrue or arise outside India, even it is not received or brought into India during the year, means if there is any income which is earned by the assessee outside India, even if it is not received in India or not brought into India, then it will be taxable in India. Means in the case of resident and ordinary resident, any of the income which is accrue in India, arise in India, deemed to be accrue in India, deemed to be arise in India, receive in India, or deemed to be receive in India, whether or any income which is earned in India, earn or arise outside India, it will also be taxable in India. Means all the income, in the simple word, all the income of resident and ordinary resident will be taxable in India. It will be taxable in all income. In the case of resident but not ordinary resident, if there is any person who is the resident of India but he is not the ordinary resident of India, but he is not the ordinary resident of India, then each and every income which is accrue, arise, receive, or deemed to be accrue, arise, or receive in India will be taxable in his hand. It will be considered his income. But any of the income which is earned by such person in outside India, it will not be included in the total income of such assessee. Means the person who is a resident of India but not ordinary resident of India. So the total income which is accrue, arise, receive, and deemed to be accrue, arise, and receive in India only, then it will be considered as his total income and it will be taxable in India. But if there is any income which is earned outside India, receive outside India, it will not be taxed in India. However, where such income is derived from the business is controlled or in the profession which is set up in India, then it must be included in the total income of the assessee. If there is any business which is controlled or there is a profession which is set up in India, then it must be considered or must be included in the total income of the assessee, even though it accrue and arise in India. Means if the management of the business is in India, then it will be considered as Indian company or Indian business, then it will be taxable in India. In the case of non-resident, any income which is received or deemed to be received in India in the previous year, it will be taxable. And if there is any income which is accrue or arise in India or deemed to be accrue or arise in India in the previous year, then it will be taxable in India. Means any of the income which is accrue, arise, deemed to be accrue, arise, and receive in India, then it will be considered as income which will be taxable in India in the case of non-resident. In the case of non-resident, note all assessee, whether resident or not, are chargeable to tax in the respect of their income which is accrue, arise, receive, or deemed to be accrue, arise, or received in India, whether as a resident. Means if in the case of all the assessees, whether he is resident of India, whether he is a non-resident of India, any of the income which is accrued, of the income which is accrued, arise, or received in India by resident or by non-resident, by resident or by non-resident, then such income will be taxable in India. Means we can say any income which is accrue in India, arise in India, accrue in India and arise in India or receive in India, it will be taxable in India, whether it is earned by any person, whether it is earned by any person. Residential status and the scope of total income. Now we will discuss, because to calculate the income which is taxable in India, the residential status is very much important, because on the basis of residential status we will identify whether such income will be taxable in India or not. Number one, in the case of resident and ordinary resident. Number two, resident but not ordinary resident. Number three, non-resident. Number three, non-resident. Income received or deemed to be received in India during the previous year, it will be taxable in the hands of all. Means if any income which is accrue, which is arise or deemed to be received or deemed to be accrue and arise in India, it will be taxable in all cases. It will be taxable in all cases. Any income which is accrue or arise or deemed to be accrue or arise in India during the previous year, if any income which is received in India, deemed to be received in India, it will be taxable in all cases, whether non-resident, whether resident and ordinary resident, whether resident but not ordinary resident. If any income which is arise in India or deemed to be arise in India, then it will be taxable in all cases. But if there is any income which is accrue or arise in outside India, when there is any income which is accrue and arise outside India, in the case of resident person, if it is not, even if it is not received in India, but it will be taxable. But it will be taxable in India if it is earned by arise by the resident and ordinary resident. In the case of resident but ordinary resident, it will be taxable, but only if such income from the business and profession and it is controlled or set up in India. Otherwise, it will not be taxable in India. If such income is earned from outside India, is arise from outside India, but it is from business and profession, the business and profession which is controlled in India. And in the case of non-resident, such income will not be taxable in India. Such income will not be taxable in India. Now, for the purpose of this, we will discuss an example. From the following particulars of the income which is furnished by Mr. Anirudh pertaining to the year ended 31st March 2021. Compute the total income for the assessment year 20 and 21. For the assessment year 20 and 21, there is a requirement to calculate the amount of taxable income of the assessee. Resident, if he is a resident and ordinary resident but not ordinary resident and non-resident. Number one, he is a resident and ordinary resident of India. Number two, resident but not ordinary resident of India. And number three, non-resident. Number one, income. Short-term capital gain on the sale of share of an Indian company and it is received in Germany. Short-term capital gain on the sale of an Indian company which is received in Germany, 15,000. Dividend from a Japanese company and it is received in Japanese company. Okay. Rent from the property in London and deposit in the Bank of London. Later, it is remitted to India through the approved banking channel. 75,000. Dividend from RP Limited, an Indian company. Dividend from the RP Limited from an Indian company. 6,000. Agriculture income from land in Gujarat. Agriculture income from the land of Gujarat, 25,000 rupees. Now, we will discuss the incomes. Now, we will discuss income which will be taxable in the hands of assessee. Number one, short-term capital gain on the sale of share of an Indian company in the Germany. So such income is arise in India. So it will be taxable in India in all cases. Means if he is a resident of India or ordinary resident of India, then it will be taxable in India. If he is not ordinary resident, then after it will be taxable in India. And in the case of non-resident, it will also taxable in India because such income is accrue and arise in India, but it is received in outside India, but it is accrue and arise in India. So it will be taxable in all cases. Number two, dividend from the Japanese company which is received in Japan. Such dividend is accrued in outside India and as well as received in outside India. So it will not be taxable. So it will be taxable only in the case of resident and ordinary resident. It will be taxable only in the case of resident and ordinary resident, but it will not be taxable in the hands of resident, but not ordinary resident or the non-resident, because such income is neither accrued in India nor received in India. Neither accrued in India nor received in India. So if the income which is neither accrue in India, not arise in India, then it will not be taxable in India. Then it will not be taxable in India. So 10,000 rupees will be taxable only in the hands of when he becomes resident and ordinary resident of India. When he becomes resident means such 10,000 only where it is in taxable in India. Just like there is a Aniruddha, sorry, Aniruddha. Number one, he is a resident and ordinary resident. Resident, non-ordinary resident, and then non-resident. Number one income is short-term capital gain. It will be taxable in all cases because it is accrue and it is accrue in India, arise in India. Dividend. It is neither accrue or nor arise in India. So it will be taxable only in the hands of resident, because in the case of resident, all income will be taxable in India. Rent from the property in London. Rent from the property in London, which is deposited in London, later on the receipt of India through the approved banking channel, means such amount of rent, it is neither accrue in India, it is not accrue in India, but later it is received in India. So in the case of a resident and ordinary resident, if there is any income which is accrue outside India, if it is received in India, then it will be taxable. So it will be taxable because it is received in India. After that, but in the case of ordinary resident and non-ordinary resident, if such income is relating to the business which is managed, from India, then it will be taxable, otherwise it will not be taxable. So in this situation, this is not a business income, so it will not be taxable in the hands of resident, but not ordinary resident, and it will not be taxable in the hands where he is not resident. Dividend from RP and Indian company. Dividend from RP, it is accrue in India or arise in India, means it is accrue in India as well as receive in India. It will be considered as a receipt, means it is accrue in India, then it will be taxable in all cases. Agriculture income, it is totally exempt. Agriculture income, it is totally exempted, so it will not be taxable in any case. And it is means it is Gujarat, so it will be taxable in the hands of a resident and ordinary resident, but it will be exempted. So that total income will be 1,06,000 and 21,000. So it is 83. So in the case of rent, the house property rent, so after providing a deduction under section 24 Act, so the rent, it is 75,000 less deduction 24A, it will be 30% of amount. So it will be 52,500. So 83,500 and 21,000. 21,000, 24,000. This is the total amount which will be taxable in the hands of Anirudh if he is a resident of ordinary resident of India and resident but not ordinary resident of India, and in the case of not resident. In the case of not. So it has been assumed that the rental income is the gross income, and we will provide the reduction under section 24F, 30% standard reduction. Agriculture income is totally exempted from tax under section 10, subsection 1. Now we will discuss what is the meaning of income received and deemed to be received. What is the meaning of income received or deemed to be received? What is the meaning? So any of the income which is received or deemed to be received in India, on such income the assessee will be liable to make the payment of tax. Make the payment of tax means all assessee are liable to make the payment of tax in the respect of income, the income which are received in India or deemed to be received in India by them in India during the previous year, irrespective of their residential status or the place of accrual. Is that if there is any income which is received in India or deemed to be received in India, then in all cases, it will be taxable in India. It will be taxable in India, irrespective of their residential status, income to be included, such income to be included in the total income of the assessee immediately to the actual or deemed receipt. It will be included in the total income of the assessee. The receipt of income refer to only the first occasion when the recipient get the money. Receipt means when the recipient get the money under his control, means when he received the amount of such income, then it will be considered as a receipt. Therefore, when once an amount is received as income, remittance or transmission of that amount from one place or places to another does not constitute receipt of income in the hands of subsequent recipient and at the place of subsequent receipt. Means if there is any assessee, he has received the income, then it will be considered the income in his hand. Now he transfer or he gave such money to the another person, so in the hands of such another person it will not be considered as income, it will not be considered as income deemed to be received in India. Means income deemed to be received in India, section 7. Contribution in excess of 12% of salary to the recognized provident fund or the interest credited in excess of 9.5% per annum annual accretion to the credit of recognized provident fund, then it will be deemed to be received in India. Contribution in excess of 12%. If there is any contribution which is more than 12% to the recognized provident fund, and there is the amount of interest which is more than 9.5% per annum, it will be considered as income deemed to be received in India. Contribution by the central government, contribution which is made by the central government or by the any other employer in the previous year under the pension scheme fund, then it will be considered as income received in India, deemed to be received in India, and amount which is transferred from unrecognized provident fund. If there is any amount which is transferred from the unrecognized fund to the recognized provident fund, amount transfer to unrecognized provident fund to recognized provident fund, then it will also be considered as income deemed to be received in India. Means if there is any contribution which is more than 12% of salary to the recognized provident fund, it will be considered as income. Deemed to be received in India. Contribution made by central government or by any other employer in the previous year in the respect of pension fund, then it will be considered as received in India, deemed to be received in India. And if there is any amount which is transferred from unrecognized provident fund to recognized provident fund, then it will be considered as income deemed to be received in India as per section 7. So this is the means actually receive the income in cash or in amount, then it will be considered as income received in India or income received deemed to be received in India in these three cases. What is the meaning of Income accruing and arising in India. What is the meaning of income accruing and arising in India? So accrue means right to receive. When there is any assessee receive right to receive of such income, then it will be considered that means if there is any assessee has the right to receive such income, then it will be considered that such income is accrued. For the example, the salary for the month of March, it will be due in the month of March, but it will be received in the April. But it is accrue, means he will receive it. Then such amount is accrue. Means means accrue refer to the right to receive income, whether as due refer to the right to enforce payment of the same. Is that salary for the work done. The salary for the work done in December will accrue throughout the month. Means it will be due in the month of December, 31st December, but it will be received after the 31st December. Means it is due in the month of December, then it will be considered that it is due, it is arise, it is accrue, it is accrue. Similarly, on the government security, interest payable on the specific date, it's arise during the period of holding day to day, but it will become due for the payment of specific date. Means if there is any assessee who has the security of the government security, and according to the government, the interest or the dividend on the security will be due on the specific date. Then the interest will be payable on such a specific security on the specific date arise during the period of holding day to day, but it will be due on the specific date. It is will be due on the specific date. For example, interest on government security is usually payable on the specific date. Interest on the government security is usually payable on the specific date, say on 1st January or 1st July. In all such cases, the interest would be said to be accrued from 1st July to 31st December, and on the 1st January it will fall due for the payment. 1st July it will fall due for the payment. So the interest on government security, it is usually payable on the specific date, means 1st January or 1st July. It is due for the period from 1st from 1st July to 31st December, but it will be paid on 1st January. So it is arise, it is accrue, but it will be received on or after 31st December, but it is accrue. So it will be considered as accrual. Means when the income due, it will be considered as accrue. It must be noted that income which have been taxed on accrual basis cannot be assessed again on receipt basis. If there is any income which is taxed on the accrual basis, then it will not be taxed again when it will actually receive, because there will be double taxation. If we will tax it again, then there will be the double taxation. If there is any income which is taxable on the basis of accrual basis, then it will not be taxable again on the receipt. Income deemed to be accrue and arise of India. What is the meaning of income deemed to be accrue or arise in India, or arise in India, or arise in India? What will be the meaning? What will be the meaning of income accrue and arise in India? Accrue, arise in India, section 9. There are certain type of income which are deemed to accrue or arise in India, even they are not actually accrue and arise outside India. Even these income actually accrue and arise outside India. Means there are certain type of the income, there are certain type of the incomes which are deemed to be accrue and arise in India, which are deemed to be accrue and arise in India. The category of the income which are deemed to be accrue and arise in India are, means there are some income which are deemed or arise in India, even they may actually accrue and arise in outside India. So the category of these income are: number one, any income which is arise or accrue to an assessee in the place outside India, whether directly or indirectly. When there is any income which is accrue or in arise in outside India, it is accrue and arise in outside India, but such income is directly or indirectly. But such income is directly or indirectly through or from any business, a business which is located in India, through any business which is located or which is a connection in India, through or from any property in India. Such income is received from a property as a property is located in outside India, sorry, in India. Such income through or from any asset or any source of income in India, or though the transfer of the capital asset and the capital asset is situated in India, and it would be deemed to accrue and arise in India, means that such income is arise from the transfer of such capital asset, and such capital asset is situated in India. It is situated in India. Then it will be such, and such income is deemed or arise in India, and such income is deemed and arise in India, means if these income accrue and arise in outside India, but these income are related to the business and the business is connected to India, such income is related to the property and such property is in India, and such income is related to the assets and other source which are in India, and such income is related to the assets, capital assets, and such capital asset is transferred, means the asset which is transferred is situated into India, then it will be deemed to accrue and arise in India. Income from salary earned in India. If there is any income which is earned by the assessee as a salary, and it is deemed, or it is, if it is a, and there is any income by the way of salary is earned by the assessee, it will be deemed, or it will be accrue, it will be deemed or arise in India if it is earned in India. If there is any salary which is earned by the assessee in India, it will be deemed to accrue or arise in India only if it is earned in India, only if it is earned in India. Salary payment for the service which is rendered in India would be treated that such amount is earned in India. If there is any salary which is payable for the services which is rendered by the assessee in India, then it will be treated that such salary is earned in India. Such a salary is earned in India. Further, any income under the head of salary which is payable for the rest period or leave period which is proceed and succeed by the service rendered in India and from part of the service contract of the employee shall be regarded as income, and it is earned in India. If there is any income which is related to the service, so which is related to the salary payment, and means if there is any leave period salary, and such salary is arise or such amount is arise when the assessee he is providing the services or rendering the services in India, then it will be considered that it is the income which will be taxable. Means if there is any assessee he is earning the income by the way of salary, then the salary which is earned in India, it will be taxable in India. Means it will be deemed it is arise or accrue in India. If there is any salary which is due for the service which is rendered in India, would be treated as earned in India. If it is if the salary for the service rendered in India, then it will be treated as earned in India. Then it will be treated as the amount is earned in India. Income income from salary payable by the government. Income which is salary payable by the government. Income from salary, the salary which is payable by government for the services which is rendered outside India. If there is any assessee who is engaged in the services and the services is rendered by such assessee in outside India, and the salary is payable by the government, then the income which is earned from or by the way of salary, the salary which is payable by the government to the citizen of India who is providing the services or rendering the services outside India, then it will be deemed such a salary is accrue or arise in India. So salary is accrue or arise in India. In India, however, allowances and the perquisite paid or allowed outside India by the government to the Indian citizen for the service rendered outside India is exempt. Means allowances and the perquisite which are provided by the government to the citizen of India, and these perquisite and allowances are provided in outside India to such person during the job, during the service, it will be exempted from tax. And as per section 10 subsection 7, as per section 10 subsection 7, such amount will be exempted from tax. Now we will discuss an example, and on the basis of such example we will understand the total income, which will be means gross total income of the assessee. Mr. David, an Indian citizen, age 40 years, a government employee, he is a government employee and serving in the Ministry of External Affairs, left India for the first time on 31st March 2020 due to the transfer to High Commission of Canada. He did not visit India any time during the previous year 20 and 21. He is not visited in India any time in the previous year 20 and 21. He has received the following income for the financial year 20 and 21. Salary 5 lakh rupees, foreign allowance 4 lakh rupees, interest on fixed deposit from bank in India 1 lakh rupees, income from agriculture in Nepal 2 lakh rupees, income from house property in Nepal 2 lakh 50,000 rupees. On the basis of this, there is a requirement to calculate gross total income of the assessor for the assessment year 21 and 22. On the basis of this, there is a requirement to calculate the total income of the assessor. So he is not the city, means he is not the resident of India because he has not visited in India any day in the financial year 20 and 21. So Mr. David, he will be considered as a non-resident of India. Non-resident of India. So in the case of non-resident of India, the income which is accrue or arise deemed to be accrue or arise or received or deemed to be received in India will be taxable. Means in the case of non-resident, only the following income will be taxable in India. Number one, the income which is received, or deemed to be received, the income which is received or deemed to be received in India, or the income which is accrue or arise or deemed to be accrue or arise in India, then it will be taxable in India. It will be taxable in India. So as per the above provision, the agriculture income in Nepal and the income from house property in Nepal, it would not be taxable in the hands of David because such income is accrue or it is received in Nepal. It is received in Nepal. It is not in India. Nepal is not in India. So it will not be taxable in the hands of Mr. David. And the income, salary income, which is payable by the government to the citizen of India, it will be taxable in India because it will be considered that it is received by him in outside India, but it is accrue and arise in India, so it will be taxable in India. So it will be taxable in India even if he is a non-resident, even if he is the non-resident of India. So such 5 lakh rupees will be taxable in India. It will be taxable in India. And foreign allowance, it will be exempted as per section 10 subsection 7. Interest on fixed deposit in such income is accrue and arise in India, then it will be taxable in India. Then it will be taxable in India. Income from agriculture in Nepal, it is outside India, not taxable in India. And house property in Nepal, it will not be taxable in India. Only 6 lakh rupees, only 6 lakhs, such 6 lakhs will be taxable in India. Allowances and the perquisite paid or allowed as outside India by the government of India, it will be exempted as per section 10 subsection 7. So the foreign allowances 4 lakh rupees will be exempted. Only salary 5 lakh rupees and income from other sources, means interest on fixed deposit in India, will be taxable in India. It will be taxable in India. Dividend paid by the Indian company outside India. If there is any dividend which is paid by the company outside India, if there is any dividend which is paid by the Indian company outside India, then it will be deemed or it will be accrue or arise or deemed to be accrue and arise, and it would be taxable in India. Because it is accrue and arise in India, then it will be taxable in India, in the hands of shareholder. In the hands of shareholder. Interest. What is the meaning of, sorry, what will be the treatment of interest? What will be the treatment of interest? Under section 9, subsection 1, under section 9, subsection 1, clause 5, and interest is deemed to be accrue and arise in India if it is payable by, if such income, if it is payable by, if such amount of interest is payable by government or by any person who is a resident of India, means the interest will be deemed or accrue, deemed to be accrue or arise in India if such interest is payable by government or by any person who is a resident of India. Exception, where it is payable in the respect of any debt, the debt which is accrued or money which is borrowed and used for the purpose of business or profession. If it is payable, means such interest is payable in the respect of any debt, the debt which is accrued or incurred or money which is borrowed and it is used for the purpose of business and profession and which is carried on by him outside India or for any purpose or any income from any source outside India, it will not be deemed to be accrue or arise in India. Then it will not be deemed to be accrue and arise in India, means if such interest is arise on the borrowings and such borrowings are taken by the assessee for the purpose of business and profession by him outside India or for any other purpose of making and earning any income from any source outside India, from any source outside India, then it will not be deemed as accrue and arise in India. It will not be deemed. Any person who is a resident of India, any person who is a resident of India, who is who when it is payable in the respect of any debt which is incurred or money borrowed, and it is used for the purpose of business or profession, which is carried on India. Means if there is any person, he is a non-resident of India, but the interest is payable, in the respect of such a debt, the debt which is incurred or money which is borrowed for the purpose of business, and such business is carried in India. Such business is carried in India, then it will be taxable. It will be considered as deemed or accrue in India. But there is an exception that interest on money which is borrowed by the non-resident, if there is any money which is borrowed by the non-resident for the purpose in India other than business and profession, means such money is borrowed for the purpose other than business, then it will not be treated as earn or accrue in India. Then it will not be considered as accrue and earn in India. Example, if a non-resident A, if there is a non-resident A and A borrow money from a non-resident. There is a Mr. A, he is a non-resident and he borrowed the money from a non-resident B and invest the same in the shares of an Indian company. Invest in the shares of share in the Indian company. Interest payable by A to B will not be deemed accrue and arise in India because it is not relating to the business and profession. If such money is borrowed for the business and profession, then it will be considered deemed to be accrue and arise in India. But such money is borrowed to purchase the share, not for business purpose, then it will not be considered as income accrue and arise in India. It will not be considered as income accrue and arise in India. In the case of royalty, royalty shall be deemed to accrue and arise in India when it is payable by, means the amount of salary, sorry, the amount of royalty. It will be deemed to accrue and arise in India when it is payable by, the government or by any person who is a resident of India, when the amount of royalty is paid by the government of India or by the person who is the resident of India, Exception, where it is payable in the respect of transfer of any right, when such a royalty is payable in the respect of transfer of any right or use of any property or the information which is used or for the utilization of services for the purpose of business and profession, and it is carried on by the person who is in outside India. And for the purpose of making or earning any income from any source outside India, then it will not be deemed to be accrued and arising. Then it will not be deemed to accrued and arise in India. Is that if there is any royalty which is paid by the government or by the any person, then it will be deemed as accrue and arise in India. But if it is payable in the respect of any transfer of any right or the use of any property or information, use or for the utilization of the services for the purpose of business and profession, which is carried on by the assessee outside India, or for the purpose of making or earning any income from any source outside India, then it will not be considered accrue and arise in India. Then it will not be considered as accrue and arise in India. A person who is a non-resident of India, if there is any person, he is a non-resident of India. Only when such a royalty is payable in the respect of any right to property, information, services, which is utilized for the purpose of business and profession in India, then it will be considered as accrue and arise in India. Is that when there is a person, Mr. John, he is the non-resident of India. He is the non-resident of India, and he earned the royalty income. He earned the royalty income. Means when the royalty income is payable in the respect of such a means the royalty income is payable in the respect of such a right, property, services, business means services, or utilization of information for the purpose of business and profession, and such business or profession is in India, then such income will be considered, it is deemed to be arise in India, then it will be considered as income deemed to be arise in India. Fees for technical services. The fees for technical service shall be deemed to be accrued and arise in India only when it is payable by government or the person who is a resident of India. If the fees for technical services it is payable by the government or payable by the any person who is a resident of India, then it will be considered as income accrue and arise in India. There is an exception that where the fees it is payable, where the fees it is payable in the respect of technical services. There is a fees which is payable in the respect of technical services, and the technical services is related to the utilization of business and profession, and it is carried on by such a person outside India for the purpose of making or earning such income, for making or earning such income from any source outside India. Means the fees for technical services are payable in the respect of such services, and the services are utilized in the business and profession, and such business and profession is in outside India for the purpose of making the earning in outside India, then it will not be taxable. Then it will not be considered as accrue and arise in India, because the business in outside India and the earning is also from outside India, then it will not be considered as accrue and arise in outside India. A person who is a non-resident, if where the fees is payable in the respect of services and the services are utilized for the purpose of business and profession owned by such a non-resident in India, if such services payable for the purpose of business and profession, and such business and profession is in India, and the services are utilized by the such a non-resident for the purpose of earning any income from any source in India, then it will be taxable, or it will be considered deemed to be accrue and arise in India. Then it will be considered as deemed to be accrue and arise in India. If such amount is payable by the non-resident for, and such amount or such services is utilized by the assessee in his business and profession in India, or these services are utilized by such person for making or earning any income from any source in India, from any source in India. Fees for technical services means, what is the meaning of fees for technical services? Fees for technical services means any consideration for rendering the fees for technical services means any fees or any consideration for rendering any managerial services, for technical services, for consulting services. Means if there is any consideration which is received in the consideration of technical services, in the consideration of consulting services, managerial services, then such amount will be known as fees for technical service. However, it does not include compensation for any construction. It does not include any amount of compensation. Sorry, it does not include any amount of any construction, assembly, mining, and like project which is undertaken by the recipient or the consideration, which would be the income which is chargeable under the head of salary. Means fees for technical services does not include any amount which is chargeable as salary. It will not be considered as fees for technical services. If the amount which is received as a salary, then it will not be considered as fees for technical services. Fees for technical services. Now we will discuss our example, and on the basis of such example, we will understand the taxability. Miss Viditha paid a sum 500 USD to Mr. Kuleshwara, a management consultant and practicing in Colombo, specializing in project financing. The payment was made in Colombo. Payment is made in Colombo. Mr. Kuleshwara is a non-resident. The consulting services are related to the project in India. The project is related to the India. With possible close collaboration. Is this payment chargeable to tax in India? In the hands of Mr. Kulesh Khara? Since the services are used in India, these services are used in India. So, if there is a non-resident and such a non-resident shall chargeable to tax in India, if such income, is received by such a non-resident is chargeable to tax in India in the respect of the income which are received outside India, if such income accrue or deemed to be arise in India. Means if there is any income which is accrue, arise, or deemed to be accrue or arise in India, but it is received outside India, but it will be taxable in India. If it is accrue and arise in India, if any of the income of non-resident which is accrue and arise in India, then it will be taxable in India. It will be taxable in India. The income deemed to be accrue or arise in India under Section 9 comprise income by the way of fees for technical services, which include any consideration. Fees for technical services means any consideration which is received in the consideration of or for rendering any managing services, any consulting services, any technical services. So, if there is any payment which is made to such management consultant related to the project financing, it is covered in the scope of fees for technical services. Means such payment to such person will be considered as fees for technical service. Fees for technical services is that if these services are used in India, then it will be deemed to accrue and arise in India. Is that if the income is arise, means such fees is payable, such fees is accrued due to the services which is provided by such person, and such technical services are used by the person in India. Means it is these services are utilized in India, then it will be deemed to be accrue and arise in India. Then it will be deemed to accrue and arise in India in the case of non-resident. And such income will be added or it will be taxable in India in the hands of such a non-resident. It will be taxable in the hands of non-resident in India. So in this situation, such a $5,000 which is paid by Miss Viditha to Mr. Kulesh Khara as a managing consultant will be taxable in India because such services are utilized in India. So it will be deemed to be accrue and arise in India, or in the case of non-resident, if any income which is deemed to be accrue and arise in India, then it will be taxable in India. Then it will be taxable in India. So in this case, the service were utilized in India and the payment is received by Mr. Kuleshwara in Colombo. It will be chargeable in India. It will be chargeable in India because it is accrued, deemed to be accrued and arise in India. Any sum of money paid by the wait any sum of money which is paid by the resident Indian to a non-corporate, non-resident or foreign company means there is any sum which is paid by the Indian resident to a non-resident or to a non-corporate or a foreign company. So in this situation, income arise outside India because the payment is made to foreign company or the payment is made to corporate which is non-resident to a non-corporate which is a non-resident. Then such income is arise outside India. Being any sum means the income which is arise outside India. Being any sum of the money which is paid outside outside the consideration by a Indian resident person to a non-corporate or non-resident or a foreign company means there is a payment of money paid by the resident Indian to a non-corporate or to a non-resident or foreign company. Then it will be deemed to be accrued and arise in India if the same is chargeable to tax under section 56 subsection 2 clause 10. Is that if the aggregate sum which is received by such a non-corporate, non-resident or the foreign company exceed 50,000. If it is more than 50,000, then it will be taxable. It will be deemed to be accrued and arise in India, and it will be taxable in India. Then it will be taxable in India. Now we will discuss all these concepts by the way of such example. We will understand an example. Means we will discuss an example, and on the basis of such example, we will understand. Compute the total income in the heads of individual whose age is 35 years. Now we will discuss a example, and as per this example, there is an individual and the age of such person is 35 years. He is a resident and ordinary resident, but not ordinary resident means in all situations there is a requirement, means there are three situations. Number one, he is the resident and ordinary resident of India. Number two, he is the resident but not ordinary resident of India. And number three, he is the non-resident of India. He is the non-resident of India. Number one, interest on UK development bond. Interest on UK development bond. 10,000, 50% is received in India. Only 50% received in India. Income from the business in Chennai. 50% received in India, 20,000. Short-term capital gain on the sale of share of an Indian company which is received in London. Short-term capital gain on the sale of share of an Indian company is received in London, 20,000. Dividend from British company received in London, 55,000. Long-term capital gain on the sale of plant at Germany. 50% profit are received in India. Total profit is 40,000. Income earned from business in Germany, which is controlled from Delhi. Total income 70,000, but only 40,000 received in India. Profit from a business in India, in Delhi, but managed initially from London. It is managed in London. 15,000 rupees is the profit. Income from house property in London. Income from house property in London, which is deposited, means income from house property in London, and it is deposited in the Bank of London. Brought in India, 50,000 rupees. Interest on the dividend of an Indian company received in London, 12,000. Fees from technical services rendered. Such services are rendered in India but received in India, 8,000. Profit from business in Mumbai and managed from London. Profit is 26,000. Income from property, the property which is situated in Nepal and received in Nepal, 16,000. post foreign untaxed income brought in India during the previous year, 5,000 rupees only. Income from agricultural land in Nepal received there and then brought in India, 18,000. Income from profession in Kenya, which was set up in India, received there but spent in India, 5,000. Gift received on the occasion of wedding, 20,000. Interest on saving bank account in State Bank of India, 12,000. Income from business in Russia, controlled from Russia, 20,000. Dividend from Reliance Petroleum Limited, an Indian company, 5,000. Agriculture income from the land in Rajasthan, 15,000 rupees. So on the basis of this, there is a requirement to calculate the amount which will be taxable in the hands of such individual. Number one, interest on UK development bond, 10,000 rupees. Only 50% is received in India. Only 50% received in India, not total 10,000. Only 50% means only 5,000 rupees is received in India. So such income means such income in the UK bonds, the income of UK bonds, if there is any person who is the resident of India, if there is any person who is a resident and ordinary resident of India, each and every income of such person will be taxable in India. It will be taxable in India. But in the case of non-resident or in the case of non-ordinary resident, the income which is accrue and arise in India, it will be taxable. It will be when it will be accrue and arise in India, then it will be taxable. Then it will be taxable in India. So interest on UK development bond, it is totally taxable in the hands of resident and ordinary resident, but only 50% means 5,000 rupees which is received in India will be taxable in India in the hands of resident and not ordinary resident. Sorry, not ordinary resident and non-resident. So total 10,000 will be taxable. Total 10,000 will be taxable in the hands of resident and ordinary resident. But in the case of resident and not ordinary resident or the non-resident, only the income which is received in India will be taxable. Only which is received in India will be taxable. Number two, income from business in Chennai. Chennai is in India, means the income is accrue as well as receive in India. Only 50% receive, but it is accrue and arise in India. So the total income will be taxable in all cases because it is accrue and arise in India. So 20,000 will be taxable in all cases. Sorry, in 20,000 in all cases. Number three, short-term capital gain on the sale of Indian company received in London. It is accrue and arise in India, but it is received in India. But it is accrue and arise in India, so it will be taxable in India. Means total 20,000 will be taxable in India. Total 20,000 will be taxable in India. Number four, dividend from British company received in London. It will not be taxable in India. Only in the case of it will be taxable only in the case of resident and ordinary resident, because in the case of ordinary resident, all income will be taxable. So it will not be taxable in the hands of not ordinary resident and non-resident, but it will be taxable in the hands of person who is a resident as well as ordinary resident. It will be taxable only in his hands. Next, long-term capital gain on the sale of plant of Germany. Only 50% is received. Means 40,000 will be taxable in the hands of resident and ordinary resident. So long-term capital gain 40,000 is taxable in the hands of, total 40,000 will be taxable in the hands of resident, and 40,000 will be taxable in other two cases. Means 40,000, 20,000 and 20,000. Okay, now the next is income earned from the business in Germany and which is controlled in Delhi. The business is controlled in Delhi. Total profit, total income is 70,000, but the income received in India is 40,000. But such a business is controlled in India. Such business is controlled in India. So in first two cases means resident and ordinary resident, it will be taxable total amount in first two cases. And in third cases, only the amount which is received in India will be taxable in India. which is received in India will be taxable in India. It will be taxable in India. Next, profit from the business in Delhi, not but managed entirely from London. The such amount will be taxable only, means the profit from business in Delhi. So 15,000 will be taxable in the hands of resident. It will be taxable in resident as well as in non-resident and ordinary resident, because such amount is accrued in India, because such amount is accrued and arise in India. So it will be taxable in India. So it will be taxable in India. Next, income from house property in London, deposited in London, brought in India. So such amount will only taxable in the hands of resident, because it is neither accrue or neither accrue nor received in India. So it will be taxable. So it will be taxable only in the case of, only in the hands of resident, ordinary resident. 50,000. 50,000. Next point, interest on dividend in an Indian company, means such income accrue and arise in India. So it will be taxable in all cases. In all three cases, it will be taxable. Next, fees from technical services rendered in India but received in India, it is accrue and arise in India. So it will be taxable in India. So it will be taxable in India in all cases. Next is profit from the business in Mumbai, managed from London. Profit from business in Mumbai, means such income and such profit is accrue and arise in India. So it will be taxable in all cases. 26,000 taxable in all the cases. Next, income from property situated in Noida. It is received in Noida. Sorry. In Nepal. It is in Nepal. Nepal is not in India. It is not in India. So it will be taxable only in the hands of resident, ordinary resident. But it will not be taxable in other two cases. It will not be taxable in other two cases. Next, income post foreign untaxed income brought in India during the previous year, 5,000 rupees. It is untaxed foreign income. It will be taxable in India, not in any other country. Sorry, not in any other. Because it is untaxed. It is untaxed post foreign untaxed income brought in India during the previous year. Then it will not be taxable, because it is not receive, accrue, nor arise, not received in India. So it will not be taxable in India. Income from agricultural land in Nepal and received there and brought in India. So only in the case of ordinary resident, it will be taxable, and only in the case of ordinary resident, it will be taxable. Next, income from profession in Kenya, which set up in India, received there but spent in India. So 5,000 will be taxable in the case of resident, who is a resident of India as well as non-resident of India, but it will not be taxable in the hands of non-resident. 5,000 rupees will be taxable in two cases, first two cases, not in third cases. And next, gift received on the occasion of wedding, it will be fully exempted. If there is any gift which is received on the occasion of marriage, then it will be exempted. Interest on the saving bank account in State Bank of India. Interest on saving bank account in State Bank of India, it will be taxable in all cases, but up to 10,000 rupees, means it will be taxable in all the cases. It will be taxable in all cases. 12,000. Income from business in Russia, controlled from Russia, it will be taxable only in the case of resident who is ordinary resident. In other two cases, it will not be taxable. Only resident and ordinary resident. And the next is dividend from Reliance. It will be taxable in all cases, in all three cases. And the next is agriculture income. It will be fully exempted. Agriculture income is not taxable in India, so it will be exempted. So it will be exempted. So the total income is 3,52,000, 2,18,000, and 1,83,000 rupees. 83,000 rupees. But there is a deduction of 80 such interest amount. 12,000 will be deducted. So the total income will be 3,42,000 rupees. 2,08,000 rupees and 1,73,000 rupees is the total amount of income which will be taxable in the hands of resident and ordinary resident, resident as well as not ordinary resident and non-resident. So this is the total income which will be taxable. So on the basis of such example, we have discussed which income will be taxable in the hands of resident, ordinary resident, resident but not ordinary resident, and non-resident and non-resident. So these are the, so on the basis of such example, we have understand the concept of scope of income. We have understand the concept of scope of income, means which income will be taxable in the hands of assessee or which will not be taxable. So thank you so much for watching this video. Okay, bye bye and have a nice day.